Hello everyone, this is Brooke, DeFi analyst from TID Research, and today I would like to talk about a very interesting protocol called Resupply. So if you look at the intro here, it is actually a decentralized stablecoin protocol leveraging the liquidity of lending markets. So I think in essence, it's actually saying that it allows you to build leverage on top of your lending position in the online lending market. So what exactly does that mean? We can take a look at the available markets here. And then you can see that here says that the total REUSD borrow. REUSD is the stablecoin issued by Resupply, and the way you can mint and borrow it by supplying the collateral here. And the collateral here says, for example, CRVUSD, USDE, curve lend. And then it actually means that you can supply your lending position on a curve lend as the collateral to mint and borrow RUSD against it. And then you can even build leverage on top of it. If you look at the explanation here, it says that by holding this collateral, you are lending CRVUSD against the USDE collateral other people supply on curve lend. And then in this way, you can borrow REUSD. Let's go to the online market here to better understand what this means. We go to the Llama Land. Llama Land is a lending market managed by Curve. And then on Llama Land, for example, we find the market we're looking at. So it's a USDE CRVUSD market. You can see that people who like to borrow here, they first need to supply USD as the collateral, and then they can type in the CRVUSD amount they would like to borrow. And on the other hand, you can actually act as a supplier to supply CRVUSD into this market. The supply will be borrowed by those who supply USD as collateral. The reason why this is helpful is that a lot of time, holding USDE can earn you Ethereum points. And if you're holding other yield-bearing assets, you can get the funding rate on top of all these. So naturally, people would like to build leverage on top of it. This market provides liquidity for those leverage traders who like to build leverage on these assets. They can supply collateral, borrow, build leverage on top of these assets. If you're a supplier, lender in this market, you're actually getting part of the benefit of this leverage trade because people have demand for leverage, and therefore the supply APY can be supported, and then therefore you can earn the lending APY, the elevated lending APY. And then this is the first layer of the supply. So if we go to Resupply, you can see that Resupply, just like its name, is actually help you to supply on top of your supply. So after you supply CRVUSD into the online market on the curve lend with the USD as a collateral, you can actually come here and then supply the CRVUSD you have already supplied on Llama Land, and then you can mint RUSD. So a lot of people have been thinking, why would I want to, if I already supply CRVUSD on the Llama Land, why would I want to mint RUSD? There are a few reasons. The first one is that probably you need the liquidity, and then however you don't want to unwind the position, because unwinding the position will, for example, say Curve is doing the airdrop program, so unwinding position will make you miss the airdrop. So on the one hand, you want to maintain the lending position. On the other hand, however, you might need some immediate liquidity, and therefore you can come to mint it. And the other reason is that you want to farm the interest rate spread. USD, CRVUSD, you can see it's actually 1.8%. And let's look at the borrowing cost. The borrowing cost, native APY itself is like 4.47%. However, there's a RSUP reward. So RSUP is the governance token of the resupply. So they're actively incentivizing people to borrow to mint RUSD. So you can see that the net borrowing cost is actually positive 19%. So it means that you're actually paid to borrow. That means that by lending the CRVUSD, I can earn 1.8%. And with CRVUSD collateral, I can actually borrow USD. And my borrowing position is earning 19%. So that means that the positive interest rate spread. And what's even better is that I can build leverage on top of it. The first layer of leverage is that I supply CRVUSD, I borrow RUSD. And then I can actually swap the RUSD I borrow into the CRVUSD and supply again and then borrow again. So this process is called loop. And then if you look at the information here, you can see I can first type in the amount of CRVUSD I would like to supply. And I can just click the level of leverage I would like to build. And then here it will show the total amount of collateral you supply and also the total amount of the RUSD you will mint and borrow. And then in total, your net APR will show up here. You can see that overall your position net APR will be 15%. So for CRVUSDE, CRV lenders against USDE on the curve, my native EO will be only like 1.8%. However, if I supply my position here on Resupply, my native EO APR can be boosted up to 15.47%. And from the curve perspective, the existence of resupply help to enhance the liquidity because it also encourages people to supply more. Like, for example, if only 1.8%, it's not really attractive, so the TVO might be only like 70K. However, the existence of the resupply provide more incentive for people to borrow RUSD and then supply more. So in the end, they will just mint, for example, they supply all their CRUSD, they supply here to here, and then open up a 10 times leverage. And then in the end, the TVO can grow up to, for example, 400K. It is also good for Curve from the PAC perspective because in the past, CRV-USD was not very competitive stablecoin in terms of the use case. So for example, compared to other stablecoins such as USDC, which is the most liquid one and can be used to lend, can be used to borrow to build leverage. And then there are also like USDE, where you can mint a stake and then get USDE and then to build leverage on top of it. But for CRV-USD, you can stake it, but once you stake it, the yield you'll get is actually not very attractive. For example, like 6%. However, HUSDE is earning like 10% most of the time. So CRV-USD is actually facing the problem to grow. And right now we have this resupply. So it means that there are more reasons for people to hold on to CRV-USD. So because they can come here to supply to the market here, and then their supply APY can be pretty high because the cost is like 4.47%. And then if you supply CRV-USD here, it means that you can get at least the level of yield. And then if you look at the lend market here, you can see if you supply CRV-USD here, you're only getting like 1.8%. So that is another reason why Curve is actually working pretty actively with the resupply, because it not only enhance the demand for CRV-USD and also increase the TVO and also enhance the liquidity available on the Llama land. So that is the value proposition and the product market fit for resupply. And then you can see, in addition to this USDE curve lend market, it can actually lend to different kind of market. So you don't actually need to participate in the leverage trade yourself, because in this way you'll manage the deal very stable, you're holding as collateral, but you can act as a supplier to all these leverage trades and therefore still benefit from all this hot narrative. You can see that the max APY you can get, most of them is actually above 100%. And on top of curve lend, you can also choose to mint RUSD against your lending position on the Frax lend. So this is the first way you can use the resupply, which is to mint RUSD with your lending position and then build on top. So this is the first way. However, as you may have already noticed, this kind of a lot of moving part in this transaction. For example, you need to look into the quality of online collateral, and then you also need to look into the spread between the lending and borrowing. And then you also need to worry about trying to avoid liquidation for your leverage position on resupply. So this is more of a medium risk position. However, the reward, I think, more than justify the risk you'll incur. However, for those people who don't want to expose to the leverage risk, resupply also provide different angles for you to benefit from this very loop mania going on in the market right now. You can actually supply into insurance pool. So insurance pool is more of a passive way for you to farm and then get the revenue share from the market. So we see that there's all this lending market here, because looking at this APY, pretty naturally, some Degen trader will open up the max leverage. However, the price of the CRUSD can move, and then the price of RUSD can move as well. Sometimes when people like trading with max leverage, for example, like 20 times leverage, it is very easily for them to get liquidated if they don't manage their position properly. And then the insurance pool will step in as a liquidator to liquidate those positions. And then in return, you'll get a share of a protocol revenue. You also get a share of the liquidation incentive. So this is where the APR is coming from. And you can see that it's also a popular farming opportunity. There are 24 million RUSD. So APY is actually pretty decent. It's 13%. And it's been staying at this level or above ever since the resupply is launched. And there's also another way for it to farm the resupply. So it's called the SREUSD. So if you look at the lending market here, you can kind of understand why we need SREUSD, because all this position APR kind of encourage people to sell RUSD. So if you look at the trade flows here, it means that first I'll need to borrow supply CRUSD, then I borrow RUSD, then I need to swap the RUSD into CRUSD. So when people borrow leverage, resupply grow, and people borrow and mint and borrow RUSD to build leverage, naturally they are selling RUSD. So it's good and bad for resupply. Good in the sense that it means that the TVO is growing, and then the people are pretty happy they can build such a high APR. However, the bad is that the consequence is that resupply TVPAC, RUSD PAC is actually somewhat volatile. And then you can see that it's actually not tightly packed like, for example, USDC, USDT, or USDE. So there's around 1% of a discount. So in order to solve that issue, in addition to the insurance pool, for those people who don't want to be the liquidators, because liquidator can also incur loss if you fail to liquidate and incur back debt, they also introduced the Safe-in RUSD. So the Safe-in RUSD, you don't need to participate in liquidation, you don't need to participate in like leverage. You only need to stake your RUSD here, and then you can get a protocol revenue in return. So these two, liquidity pool, insurance pool, and the Safe-in RUSD, are both a mechanism to encourage people to hold on to RUSD. And then sometimes when the market is volatile, insurance pool APY can be very high, and then they can attract the Degen traders. And then when the market is somewhat quiet, SRE USD, the APY is roughly the same as the insurance pool APY, and then therefore it can attract more like conservative traders. Insurance pool are appealing to those somewhat low to medium risk farmers, and then the saving RUSD appealing to the low risk farmers. So you can see Resupply actually have a very complete array of product offerings. It can actually attract the leverage traders. It can also attract people, not so Degen farmers, who are interested in the liquidation, and then it can also attract those people who are only interested in farming the stable yield and not interested in being exposed to any kind of risk. So this is why Resupply, TPO, been growing, and then why it's been seeing like double-digit growth for almost every week ever since launch, because it is attractive for different group of users. And then at the end, the additional farming opportunity is that if you're not interested in any of this, or if you're not satisfied with any of this, you can actually hold RUSD and then supply liquidity to the RUSD, SCF USD. So for this pair, you can see that APR is actually 15%, and then you can actually stake it on StakeDAO to maximize the APR, and you can also choose to do it on Convex or Beefy. So on Beefy, the yield is actually auto compounded, so you don't need to worry about claiming the reward yourself. So it's yet another way for you to farm from the Resupply. So overall, Resupply as a product itself, it's working very well with the Curve and the Frax, and the Curve and Frax like it much because the product itself not only is outstanding, and its features also help Curve and Frax to further grow. And then Curve, CRUSD, Frax, FraxUSD also benefit from the launch of Resupply. And then from the farmer's perspective, they can actually get like super high yield from the medium risk transaction, and they can also get like a decent and stable yield from the insurance pool, and then they can also get like a stable low risk yield from the saving RUSD. And then for those people who are interested in LP, they can also provide LP and still earn 15%, which is better than most of the yield you can see in the market right now. So that is why Resupply is quite successful, and it is still growing like pretty fast.